بسم الله الرحمن الرحيم والحمد لله رب العالمين والصلاة والسلام على أشرف المرسلين. أحييكم بتحية الإسلام. I am أيمن محمد بكر. السلام عليكم ورحمة الله وبركاته. Today's topic is about credit risk. So the key takeaways by the end of this video will be: first, you should be able to clearly define credit risk. Second, you should be able to name the criteria by which credit risk assessors assess the borrowers when they request for loans. And number three, you should be able to tell the difference between Islamic financial institutions, credit risk management, and the conventional financiers. So let's start. على بركة الله. In a previous video, we mentioned funding liquidity risk and defined it as the risk that involves the inability of someone to meet his liabilities, leading to default. When a borrower is unable to pay his debts, he runs into funding liquidity risk. Simultaneously, when such a case happens, the lender runs into credit risk. When credit risk is the possibility of a loss due to a borrower's failure to pay his debts or meet the contractual obligations. In other words, in conventional finance, the lender may face the risk of not receiving his principal plus interest, which results in an interruption of cash flows, as you can see in the following sketch. That in turn leads to increase in the cost of debt collection, for instance, paying to debt collection agencies. When a borrower requests a loan, financiers want to test the ability of the borrower to repay the money back. They assess the borrower's credit history, capacity for repayment, capital, conditions of the loan, and any associated collateral. These factors form what is called credit score of the borrower. A high credit score implies that the borrower has a low credit risk profile, while a low credit score implies that the borrower has a high credit risk profile. Since Islamic financial institutions do not operate on receiving interest, they have to be looked at from a different perspective. Nonetheless, the products of Islamic financial institutions create debt as well. For example, murabaha, lease, and istisna. Thus, whenever a debt is created, Islamic financial institutions also have to bear credit risk. As we explained in the previous video, risk management within Islamic financial institutions should differ from the conventional counterparts, and that's due to the subtle difference of operation. To put it another way, Islamic financial institutions create non-interest-based debts. An important point that should be noted in this case: Islamic financial institutions should redefine how customers' credit scores are evaluated. Creditworthiness need to be clearly defined, moving away from subjective analysis. In addition, this makes a fresh ground for further research into techniques and methodologies for implementing credit risk assessment models that suits the nature of Islamic financial institutions. Now, let's summarize everything we have discussed so far. First, credit risk comes to surface whenever there is a debt created. Second, it is the possibility, that is, credit risk is the possibility that a lender won't get back his money due to failure on the part of the borrower. Third, financiers use credit scores to assess the ability of a customer to pay back his debts. Fourth, Islamic financial institutions provide financing based on non-interest based solutions. And therefore, fifth, these financial institutions, that is, Islamic financial institutions, need to enhance their models for assessing the credit worthiness of their customers. I ask Allah that you benefited from this video. I hope that you have found it informative. And I would love to see your comments in the section below this video. So if you would like to add anything or have any questions, don't hesitate to jot it down. By the way, for references, I will leave some links in the description box below. If you found this video useful, then don't forget to give it a thumbs up, subscribe, and share. This was Ayman Muhammad Bakr. See you until then in another video. Wassalamu alaikum wa rahmatullahi wa barakatuh.